If you thought the housing market was a disaster, you better brace yourselves, because experts claim this upcoming recession will tank the housing market to levels we've never seen before. In this video, we will be talking about the housing bubble in America that can burst at any moment and what you can do to prepare for the worst. Make sure to like and subscribe for more content like this. The U.S. housing bubble has finally burst, and real estate experts are warning that from coast to coast, property values are set to face a sizable crash. Following the massive drop in home builder stocks last week and lower than expected demand for mortgages in May, the housing market collapse is being aggravated by the dramatic surge in interest rates, which are fueling fears that a recession may be near. Affordability is only getting worse and renters are suffering too. This month, the median listed rent for a one-bedroom apartment rose above $2,000 for the first time ever. At this point, millions are already behind on their rent payments. And according to a new Bloomberg report, a tidal wave of evictions has begun today. We have compiled the latest updates, stats, warnings, and forecasts that reveal the dire state of America's new housing crisis. But before moving on, please support us by leaving a thumbs up on this video and subscribe to our channel. To avoid missing the next video in a background of rising mortgage rates, treasury yields, and borrowing costs, potential home buyers are facing the most expensive housing prices on record. U.S. consumers are dealing with higher prices for everything from coffee to cars. A recent report by Black Knight found that roughly 19 million buyers have been priced out of the housing market since the start of this year. This is due to softening demand and is happening quicker than previously expected. In fact, that led Redfin, a real estate brokerage company, to slash 8% of its workforce in an interview last week. The CEO of the company noted that as demand started to cool off, it has become clear that the company has hired many more real estate agents than it needed. I feel like the last few years have really weighed on me. I get it that we haven't been able to accommodate everyone lately. We've been hiring quite a lot to try and keep up with the housing market. But then everything went soft at the end of 2020 due to a variety of factors, and we've had some problems keeping up with all departments. So, now that the housing market has slowed down again, we're at the right size for our company. With interest rates being at an all-time low, I don't see the demand for mortgages rising again. Rising home prices mean that a lot of Americans can't afford to buy them. Hellman sees a major difference between homes that would receive 20 offers last year and now getting none at all. And what we're seeing is that some properties aren't getting any offers. I mean, about 1 in 4 homes are being discounted now, which just means that they're not getting any offers at all. The median home prices that have been searched over the past 2 years have increased by 44%. They are now sitting at $400,000 and haven't been below this figure since last year. Home prices haven't been increasing as much as they did in the recent months. And when higher mortgage rates are added into that equation, the median pay for a median home has actually increased by over 50%. The executive added that's the product of interest rates and home price increases, and both have shot through the roof. So it's really just a question of how much dry powder the consumer has, especially after their 401k has been depleted, since continued rent payments caused the skyrocketing real estate prices to skyrocket and created an overall decrease in housing affordability. In a recent interview with NPR, 40-year-old Brandon Fetter explained that he had to move this year because his landlord said she wanted to sell the place he was living in. What needs to be said about the rapid rise in house prices is that it's causing a lot of financial hardship for a lot of people, and for those who are already finding it hard to get into work, this is just another version of them getting more squeezed. These profits have been shared with consumers, and some of the largest corporations in the world are experiencing record-high profits in Boise, Idaho. One of the most overrated markets in the country, resident Tara said she experienced a $240 monthly increase in her rent this year from $1,710 to $1,950 a month after initially renting her apartment for just $1,510 in 2019. This is a huge When we discussed her 3 jobs and donating plasma just to make ends meet, she also said that she raised 2 teenage girls and wasn't able to downsize to a smaller apartment. I get it, wanting higher standards of living. The Bloomberg report found that more than 8 million Americans are behind on rent payments. It's safe to say that those who can still find a way to pay for the roof over their heads are fortunate among the vast majority of underprivileged people. Eviction moratoriums have expired, which means now there's no legislation protecting people from being kicked out of their homes. 15% of all Americans are affected by this because there's no federal eviction moratorium in place. The new figures were part of Census Bureau study that surveyed 1,027,815 households. Bloomberg reported that 3.5 million of those households were considering whether or not to pack up and leave their rented property because rents are becoming so expensive. A lot of people where I live work really hard and still can't afford a decent place to stay. Most work in the service industry and are situated in major cities like NYC, where the cost of living has skyrocketed. About 6 million households report that they could no longer afford their rent because they increased it too much. We've just come off the back of one of the worst years for inflation in decades, so it's no surprise we've seen a significant increase in people struggling to make ends meet. Even if that doesn't sound like a lot to some, many people already had maxed out credit cards and/or been financially drained by debt. As wages fail to keep up with inflation, consumer experts are saying that prices at the state level are becoming unaffordable, and this is the leading cause of evictions. Remember to like and subscribe for more of this content. Evictions are way higher than before the pandemic. In March, filings were up by 80%. In May, they rose by 47%. Meanwhile, mortgage applications dropped by 21% last month. The guys in the Princeton University Eviction Lab reckon these numbers will keep rising. The chief economist at Moody's Analytics, Mark Andy, is warning the U.S. housing market is on the verge of a coast-to-coast price crash. He says that his firm expects home prices to sink dramatically in key competitive markets that are overvalued. And Larry Bott tells me, the senior real estate advisor at Solomon Partners, that the housing market crash is inevitable and has already started to happen. The average home buyer cannot afford to pay as much as they used to. According to a recent CoreLogic analysis, 45 of the 392 areas it tracks have a greater than 50% chance of seeing home prices fall in the coming years. It's a 73% increase from the last month when only 26 markets were in that category. The probability of a price decline has intensified recently as mortgage rates continue to rise and people's confidence has been shaken by high inflation. More than 50% of markets have been shown to have a declining price, and Selma Hepp from CoreLogic says affordability is at its lowest in years. A lot of Americans are saying now isn't a good time to buy a home because more people believe the market is bad. The sentiment index from Fannie says that percentage of people who think this is a good time to purchase a home has fallen to 17%. According to recent polling, about 3 in 4 people believe that now is a bad time for home buyers. The 2 key elements required to perpetuate housing bubble growth are overvaluation and speculation. However, home price growth can't outrun income forever. When the supply of homes decreases and the demand persists, prices are forced to rise. Higher rates and a system in which more Americans cannot afford to buy property cause this trend. In 2021, we're on course for another boom, and given that the cost of property has already started to drop, it looks like this time around it will end with a similar bust. It's hard to say for sure, but we know there will be a big downturn in the housing market. If you enjoyed today's video and would like to see similar videos, click on this video to the right. Or maybe this video to the left might be more interesting to you. Hope to see you all in the next video. Take care and remember, stay informed, stay prepared.